Hey everyone, welcome back to Corporate Decoder, the place where we, like this company's stock price, try to unearth hidden value, but unlike them, we don't need mining equipment to do it. We're diving into Natural Resource Holdings' latest quarterly report, and the story it tells isn't exactly a gold rush. It's more like panning for gold and mostly finding, well, you'll see. First, let's take a quick glance at what we'll be digging into. This table of contents, like a treasure map, guides us through the financial information, management's analysis, and other important details of Natural Resource Holdings. Let's start with the basics, their balance sheet. As of January of 2025, their total assets were just over $37,000. Now, if you compare that to their liabilities, clocking in at around $326,000, you quickly realize they owe a whole lot more than they own. This leaves them with a stockholders' deficit, a negative net worth of almost $290,000. Moving to the income statement, things don't get much brighter. For the 3 months ended January of 2025, their net loss was about $9,600. Over 9 months, the net loss grew to nearly $29,000. This is on zero revenue, folks. When you're making no money but still losing it, that's generally not a sustainable business plan. Now let's check the record on how the company got to those numbers. For the 9 months ended January of 2025, the report indicates a cancellation of common stock, which reduced the total shares they had out there. But that doesn't actually help improve the fundamental financial health of the business, which, based on these numbers, still needs a lot of help. Let's check out their cash flow. For the 9 months ended in January of 2025, they used about $25,000 in operating activities, meaning the core business is draining cash, not generating it. They didn't spend cash on acquiring mining property, but that's small consolation when the main operations are bleeding money. However, proceeds from convertible notes gave them some cash. Let's get some background. Natural Resource Holdings started as an online beauty sample subscription service. Not exactly mining. They then pivoted, or more accurately, did a 180 to mining in 2020. They are now supposedly focusing on the mining business. That business is apparently still a work in progress. The report talks about how they expense costs of exploration. Basically, they write off as costs all the money they spend trying to find something valuable in the ground. This makes sense as they are still trying to figure out if they have a viable mine. Here's the big one, going concern. The financial statements were prepared assuming the company can continue operations, but the report openly acknowledges the company has massive accumulated losses. They lost nearly $29,000 over the last 9 months, and their debts far outweigh what they own. They say they're trying to start operations and generate revenue, but their cash reserves might not be enough. They hope to raise more money, but there's no guarantee. Diving into their mining property, they are amortizing or gradually writing off the cost of these rights over an estimated 20-year life. They describe purchasing the Montreal Star property in Union Park, the first purchased at almost $35,000 and the second at $4,750. Their plan is to start drilling tests, but they are still evaluating proposals. The report notes their estimated exploration will start in April of 2025 and the development stage in July of 2025 if it goes well. In related party transactions, they mentioned that a director had previously paid some expenses on the company's behalf, and the company then issued promissory notes or IOUs to that director. Those notes have since been sold to an unaffiliated party. They also issued shares to a director as payment for past salaries, stock worth $2 million to be exact. A key part of their financing comes from convertible notes. They keep issuing these things. These are debts that can be converted into stock in the company, and they are a double-edged sword. It provides cash now, but it could dilute current shareholders later. In February of 2022, they amended some old debt to make it convertible. The convertible notes have a maturity date toward the end of 2025, with an interest rate of 2% and can be converted at a price of 35 cents per share. The report also tells us about how they issued some common stock to pay off some convertible debt. The company has a loan payable that is currently outstanding. At the end of January of 2025, it was about $7,000. It has a 6% interest rate and has had its maturity date extended to April of 2025. They are paying interest on that as well. Regarding shares, the company canceled 120,000 shares in January of 2025 to try to maintain enough of a public float. to give it enough shares available for the public to trade so they can eventually upgrade their stock's listing status. Lastly, the CEO notes that the company's internal controls over financial reporting were not effective. In plain English, they're saying they have problems making sure their financial information is accurate and reliable. Alright, so putting this all together, what's the verdict on natural resource holdings? Well, the transition from beauty boxes to mining is a fascinating, if not slightly bizarre, plot twist. Their financials, however, are as barren as a poorly prospected claim. Their main weakness stems from relying on debt and potentially overly optimistic plans. The real risk lies in their ability to actually make anything, out of their mining venture. If they can't, that mountain of debt will crush them. So there you have it, a company swinging for the fences, but right now mostly striking out. It's a reminder that in the corporate world, as in gold mining, you need more than just dreams and shovels. You need a viable plan and, crucially, a little bit of luck. Thanks for watching. If you found this corporate decoder breakdown insightful, don't forget to hit that like button, drop a comment with your thoughts, and subscribe for more deep dives into the hidden stories behind the filings. Until next time,